It's now time for an in-depth look at the global markets on this Monday, and for that, I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
It is good to be with you today.
Well, last week in the U.S., President Trump threatened Mexico with a 5% tariff if it doesn't stop the flow of illegal migrants to the American border. And that sent stocks on Wall Street down between 1 1/3, 1.5%. What happened there, and where do we stand now with markets to open in New York in a few hours?
U.S. stocks extended a weekly loss to the worst since January, while Treasuries rallied a fourth day as the Trump administration trade war intensified. The S&P 500 also kept its worst month of the year, bringing its May decline past 6.5% after President Trump threatened to place escalating tariffs on Mexico. The Dow Jones Industrial average recorded a sixth weekly loss, the longest slump since the year 2011. The Mexican peso tumbled more than 2%, while the Japanese yen jumped. Trump's Mexico declaration and a report that China is planning to restrict rare earth exports leave markets set for a turbulent end to what's been a rough month for global stocks. Treasuries have benefited from haven demand, with yields on 10-year notes down to 2.15% Friday, compared with 2.50% at the start of the month. There is just a level of unpredictability that I don't think is helpful to the markets.
Well, here in Korea, buyers of Korean stocks now have a lower tax on transactions. It's down to 0.25% on all transactions, of course, irrespective of profit or loss. But the cost be up today sharply to around the 2060 mark at some points. All the top 10 stocks by market cap saw gains. What were investors looking at today?
South Korean stocks traded higher Monday on gains in tech blue chips. The benchmark Kospi advanced 26.11 points or 1.28% to 2,067 points as of close. The index started on a weak note but rebounded in a late morning trade as foreigners scooped up market heavyweights. Tech blue chips advanced. Top market cap Samsung Electronics gained 3.06%, and major chip maker SK Hynix rose 1.99%. A tax cut for stock trading came into effect today. Analysts are expecting the reduction to enhance stock transactions mildly, along with modest impact on trading volume and price level in the long term. The tax cut is also expected to boost arbitrage trade, a trading tactic that earns profit from price differences between markets by institutional investors. However, from a long-term point of view, trading volume is affected more by market conditions than tax rates for stock transactions.
Well, real quick, the U.S. threat of new tariffs on Mexico affected oil prices as well, which are down sharply. What do you see happening in oil?
West Texas Intermediate crude decreased 5.9% to $53.26 a barrel on Friday, the lowest since February. Front-month Brent crude futures were at $61.16 this morning, down 83 cents or 1.3% below Friday's close. Oil prices extended losses of over 3% from Friday, when crude markets racked up their biggest monthly losses in 6 months amid stalling demand and as trade war fanned fears of global economic slowdown. Oil prices slid on fresh trade worries after U.S. President Donald Trump stoked global trade tensions by threatening tariffs on Mexico, which is one of the largest U.S. trade partners and major supplier of crude oil. The U.S.-China trade dispute remains most critical to the global growth outlook, but the addition of trade tensions between the U.S. and Mexico raised the slower demand picture for the crude oil. However, I expect the additional sizable price fall is less likely to occur, while the market may experience high price volatility for the time being.
Got it. All right, Dr. Hwang, that's where we'll have to leave it today. Thanks as always for your analysis. Appreciate it.
Thank you very much.